Namaskar and welcome to the Economic Brief. I'm Shubhendu Ghosh. This is your weekly update on key economic developments in India and across the world. Let's find out what's on the show today. Gold continues to shine bright, crosses the rupees 1 lakh per 10-gram mark this week. Geopolitical uncertainties turning people to the traditional safe investment. Also, we'll talk about US plan tariffs as high as 3,500% on solar panels from Southeast Asia. The real target, we understand, are the Chinese companies flooding the American solar markets. And new reports reveal that Chinese goods are being funneled through South Korea to avoid steep US import duties. And in the aftermath of the shocking terror attack in Pahalgam, Jammu and Kashmir, India suspends the Indus water treaty with Pakistan. Now, before we talk about the glittering gold, let's talk about another metal, steel. Prime Minister Narendra Modi virtually inaugurated an international steel exhibition in Mumbai. He spoke about how government policies are making Indian industries globally competitive.
स्टील कितने ही सेक्टर्स की ग्रोथ का प्राइमरी कंपोनेंट है, इसलिए स्टील इंडस्ट्री के लिए सरकार की नीतियां भारत की दूसरी कई इंडस्ट्रीज को ग्लोबली कॉम्पिटिटिव बनाने में अहम रोल अदा कर रही है। हमारा मैन्युफैक्चरिंग सेक्टर, कंस्ट्रक्शन, मशीनरी और ऑटोमोटिव सेक्टर, आज इन सबको भारतीय स्टील इंडस्ट्री से शक्ति मिल रही है। इस बार बजट में हमारी सरकार ने मेक इन इंडिया को गति देने के लिए नेशनल मैन्युफैक्चरिंग मिशन की भी घोषणा की है। ये मिशन स्मॉल, मीडियम और लार्ज सभी इंडस्ट्रीज के लिए है। नेशनल मैन्युफैक्चरिंग मिशन भी हमारी स्टील इंडस्ट्री के लिए नए अवसर खोलेगा।
Let's now talk about the record gold rally that was witnessed earlier this week. This was Tuesday when that happened. Let's take a look at the manner in which gold prices have been at an all-time high. Tuesday, the gold crossed that very dramatic rupees 1 lakh per 10 grams in India. Now, the reasons were many, particularly the global uncertainty in economy, in geopolitics, really pushing people towards safer investments such as gold. And that's what we see happening this week in India. The rally really has happened all through the year. We'll talk about that. Every year has really led gold to a higher level. But this week was dramatic in the manner in which it crossed that 1 lakh mark. But mind you, there was a sharp correction on Wednesday. Gold did come down from that 1 lakh and above mark. There was a correction. Also because President Donald Trump of the US has spoken about mending ties with China, and that could have really calmed the investor sentiments, and gold as a result coming down from that record high. Moving on, let's take a look at the manner in which in the past few years, the past 5 years in particular, we're looking at dates from 2021 to 2025, the manner in which the gold has really rallied. There's about a 14 to 15% jump we see from 21 to 22 to 23, 48,099 in 2021. 2022, we see it above 55,000. In 2023, 63,203. 2024 last year. Now, as the geopolitical tensions and conflicts increases, we see the manner in which confidence in gold increases, and therefore it is the prices also increase because the demand peaks. So 2024 sees a record 78,245, and this week, this Tuesday, gold crossing the 1 lakh mark, 1,02,170 per 10 gram. We're talking about 24 carats pure gold. That's the kind of rally that was witnessed. So if you just compare in the last 5 years from 21 to 25, the gold prices had over doubled its initial price. So let's talk about the manner in which, what are the reasons that are contributing to the gold rally. Moving on to the next slides, we'll look at the key reasons. First, geopolitical tensions. As I mentioned, past few years, there is the Ukraine conflict that continues to rage on. There is, of course, the West Asia, Middle East, Gaza conflict that continues to remain very vulnerable and on the boil. Add to that, the new Trump administration comes into being, and what is happening in the US has a lot to do with what is happening with the gold prices. So uncertainty in the US economy is also significant. There are two counts to that. One is the weakening dollar as compared to other currencies, and therefore other countries and investors find gold to be a more safer and cheaper investment as compared to investing in dollar. Also, there are widespread fears, given the tariff war that is on, led by the United States. There could be a recession in the United States as soon as next year. These are, of course, projections. Goldman Sachs says about 45% chances that such an economic downturn could, in fact, hit United States, and therefore the confidence moving away from dollar to gold as a safe haven. Also, when such crises hit, such geopolitical tensions take center stage. The central banks, which are responsible for protecting the country's economy, invest in gold heavily. Also, we talk about India in particular. India has the 7th largest gold reserves, upwards of 870 tons of gold that India has in its reserves. America is right at the top with over 8,000 tons of gold. But what is interesting is that it's been a popular investment among Indian women. So many see it as that the women in India, mostly who traditionally have invested in gold, have in fact made the smartest investment in the recent times, given that every other asset has in fact depreciated except gold, which has, we've seen, touched dramatic figures of upwards of 1 lakh. So those were some of the highlights of the manner in which gold has behaved. We'll also talk about the implications in greater detail. But before that, let's listen into what US President Donald Trump had to say about the manner in which he intends a fair partnership, a fair understanding with the Chinese president. Let's listen in what he had to say.
Now we're going to be making money, a lot of money. So that's very good. Every country wants to partake. Even countries that have ripped us off for many, many years. China is an example, but it's not just China. European Union, they ripped us off for many, many years, and those days are over. We're going to make a lot of money for our people. We'll be able to lower taxes substantially, and we're going to be proud of ourselves. They're not going to be a laughing stock that got taken advantage of by virtually every country in the world.
Can you clarify, Mr. President, on China?
Yeah, we are going to have a fair deal with China. It's going to be fair.
And talk about the record gold rally that was witnessed this week. Joining me is Rahul Gupta, bullion market expert. Rahul, good evening and welcome to the show. How do you diagnose the economic challenges facing India and the world from the manner in which the gold rally took place that we've witnessed this week?
The India and Indians, we have been saving into gold since ages. Since the civilization is there, we've been saving into gold. And since 1970s and 80s, the internationally central banks had started using dollar as the primary international trade currency, by virtue of which the various central banks had started using dollar as their forex reserve. Now, the position in the present date is recently 7 CIS countries have stopped dealing into dollars. And similarly, various other central banks are wary about the dollar in the recent circumstances after President Trump had put tariffs on various countries, the trade transactions had reduced, and by virtue of that, US recession news had started coming in. So a country as big as US, if is expected to get into recession, then its currency can no longer be a forex reserves for other countries. And that was the major issue by virtue of which gold prices have been increasing in recent times, as you highlighted, that it has gone up from COVID times, that is 2021, to almost 48,000 to 1,02,000. Whereas if you go another year or two back, then it becomes almost 27,000 to 1,02,000, almost going 4 times. The primary reason has been US debts increasing into dollars before last 1 month. And since last 1 month, it is all due to US getting into recession, its countries offloading the dollars and buying gold, because there is no other currency like BRICS, etc., which are mushrooming up in the international market. Till that time, gold will be the only currency for if the US gets into recession, for dealing into inter-countries, for dealing into inter-trade transactions world over. People might start quoting the international prices into gold either. For example, those seven CIS countries which have stopped having dollars into their forex reserves. So that has really led to a panic into other countries even. I mean, for example, our country has got $600 billion. So even if we offload 10% of our forex reserves, it's a huge number, $60 billion kind of number of gold. We would be switching even if we switch 10% of forex reserve, the countries like China who are having $3 trillion forex reserves. So every central bank has been having forex reserves. By virtue of this, even rupee had been appreciating. I mean, you would compare this that on one hand, rupee has appreciated from 88 rupees to almost 85 rupees back due to US recession news. And on the other hand, gold price still in India crossed 1 lakh bar, that has reached 1,02,000. That means if our currency would have been same, that is 88, somewhere around a 3% gap. So we would have reached 1 lakh mark much higher.
Right.
And in today's date, it is trading at 98,000. It has come back 4,000 rupees. But doesn't seem to be any stopping. It's more of profit booking, which has been seen in the last 4-5 days. Even if the China deal happens or any deal happens, US recession position is there. US is not consuming with those kind of numbers as they were consuming earlier. President Donald Trump has highlighted that US got huge debt, $38 trillion debt approximately, which since Lehman Brothers 2008
Right, Rahul,
has
a
gone
little
from
more on
9
that.
trillion.
How long is this rally likely to last? I mean, will it remain as unpredictable as President Donald Trump's tariffs?
See, the US recession story, I mean, even if their tariff deals happens or anything happens, but their consumption, their US demand for every product is not going to be the same tune at all. That's very, very clear. The US, housing loan defaults and education loan defaults have started getting flagged. So keeping that in mind, US recession aspect will be there at least for a year or two. So till such time, we would 100% see the forex reserves of central banks and even common people switching to gold. So I don't see gold price rally stopping here now. I believe this year, Diwali, we should see at least 1.1 or 1.15 lakhs per 10 grams. At least this is what I expect. And rupee also is going to appreciate on the counter, because if the dollar depreciates, then we would see our rupee appreciating, which will again harm exports a little for sure, but at the same time would mitigate little effect of the international gold price on Indian consumers. Imagine if an Indian consumer who had been purchasing on a marriage at 48,000, 10 grams of gold, he would have been able to give much more jewelry to his daughter before 4 years, and it will be half of the quantity now. So our consumption in value terms would still increase, even if the quantity terms it reduces. The Indian consumption in the value terms is really going to see a huge change.
Rahul, we
huge
were also
increase.
talking about how Indian women have traditionally preferred to invest in gold. There's also dramatic trivia which says that Indian women perhaps hold about 11% of the world's gold now. What is the advice for individual retail investors? Should they be selling, holding, buying?
The Prime Minister had announced gold monetization and gold deposit scheme. At such time, an estimation had been given in 2018 that India holds some 25,000 tons of gold. The common people have got such a huge quantity. So keeping that in mind, it was a huge valuation. At that time itself, it was valued at around $1.5 trillion. And since then, the prices have gone at least 3 times. So by virtue of that, we are sitting on some kind of $4 trillion forex reserve, and gold reserve in India. So I believe as of now, because the price is on uptrend and there is no coming back as of now into gold prices substantially seen, the price may hold for a month or two, but at the same time, the trend is up. So one should not dilute. It is the time to still hold the gold. This is what I feel. And this is the time probably, as Prime Minister had started the gold deposit scheme. So probably even for the government, it's a great time. The value has gone much higher. So if now government takes forex gold deposit from the common people, so every gram at that time was fetching around $40 or $45 a gram. Now it is fetching $100 a gram. So country and government can switch their international loans.
Exciting time there for people who have in fact invested in gold in time. Rahul there, thank you so much for joining us on the Economic Brief and sharing your insight. On to our next big story. Adding to the ongoing tariff tussle, United States is planning to levy a sweeping tariff of around 3,500% on solar imports coming in from 4 Southeast Asian countries: Cambodia, Vietnam, Thailand and Malaysia. The real target, we understand, are the major Chinese solar panel makers with factories in Southeast Asian nations who are flooding the American markets with cheaper alternatives, making the local goods uncompetitive. US trade officials this week finalized steep tariff levels on most solar cell imports from Southeast Asia. Tariffs as high as over 3,500% have been planned against key suppliers. US manufacturers claim that Chinese companies operating in Cambodia, Vietnam, Thailand, and Malaysia are flooding the American market with low-cost solar panels. The tariffs are seen as a key step towards wrapping up a year-old trade case against Chinese companies for unfair trade practices. In recent years, many Chinese firms have moved operations to Southeast Asia in a bid to avoid tariffs imposed since the start of US President Donald Trump's first term. Tariffs target major Chinese firms like Jinko Solar and Trina Solar. Solar imports from Cambodia to face 3,521% tariff. Cambodian producers accused of not cooperating in the US investigation. Solar imports from Vietnam will face 395.9% tariff. Thailand will face 375.2% tariff. Countrywide rates for Malaysia were set at 34.4%. The United States ranks third globally after China and the European Union, with an installed solar capacity of around 239 gigawatts. Solar and energy storage accounted for 84% of new electricity generation capacity added to the US power grid last year. While the US is a large consumer of solar energy, it has a smaller domestic solar manufacturing capacity compared to some other countries. It is heavily reliant on solar panel imports, particularly from Southeast Asia and previously from China. Factories in Vietnam, Thailand, Malaysia, and Cambodia accounted for 13 gigawatt, or about 87.5% of the first quarter's total 14.8 gigawatt of photovoltaic module imports in 2024. America imported $12.9 billion worth in solar equipment from these 4 Southeast Asian countries last year. The decision to levy steep tariffs on Southeast Asian countries comes as a shot in the arm for American manufacturers of solar equipment. It is likely to help them in capturing the renewable power market in the United States. Critics say tariffs would harm US solar producers because they would raise prices on the imported cells that are then assembled into panels by American factories. A separate US government agency, the International Trade Commission, is due to reach a final decision on the new tariffs in June this year. The Economic Brief, DD India. And senior economic journalist Anil Padmanabhan is joining us now. Good evening and welcome. Now, while America's 3,500% tariff makes headlines, it is also pointing to certain problematic trade practices that China has been routinely engaging in.
Bindu, I don't know if there is they have followed bad trade practices, China, in this instance. They have a stranglehold in the production of solar voltaic cells and in most green products, including EVs. And their pricing is questionable because of the subsidies, etc., that are involved. But they have approached this market in a demand-supply situation, and they have sold where the products can be sold. So in the case of the United States and China, it's the US which created this base in China because they wanted low-cost goods, and China has supplied them. But US has now woken up to the fact that its domestic industry has been virtually wiped out, or in a very weak position compared to what it would have been otherwise. And it's now mounting a rearguard action to fight back. But technically, China has not employed any unfair trade practices in this instance in supplying the products.
Right. And what are the implications for these Southeast Asian countries where the Chinese factories were manufacturing these solar panels and who now face these dramatic tariffs?
Whether a lot will depend on how serious the United States is with their intent. It is fine, like you said, to grab headlines with such massive tariff hikes, but there is also reality to this. Just like the United States apparently accounts for a third of global consumption, while it has only 330 million population. China, on the other hand, supplies almost two-thirds of the world demand for a lot of these products. So both need each other. So at this point, the United States is trying to correct a structural imbalance using tariffs. So it is imposing these massive tariffs to probably pressurize everyone to come to the negotiating table. And we are aware, I mean, according to the US, that 70 countries, or now they claim 100, have already approached them to strike a deal. So I see all this as saber rattling to get people to the negotiating table and to attempt to correct the structural imbalance, though that's another story whether it will happen or not.
There, Mr. Anil Padmanabhan, thank you so much for joining us on the Economic Brief and sharing your perspective. And more on the trade tensions between the United States and China, with tariffs continuing to disrupt global trade. New reports reveal that Chinese goods are being funneled through South Korea to avoid steep American import duties. As the trade war intensifies, China is also issuing stark warnings to other countries caught in the middle. Diptanshu Kashyap brings us more in this report.
In a widening global trade controversy, China is undergoing scrutiny for allegedly funneling goods through South Korea to dodge steep US tariffs. Investigators have revealed that between January and March, nearly $21 million worth of Chinese exports were falsely declared as South Korean. A staggering 97% of these shipments were headed to the US, raising concerns about Beijing's ways to circumvent tariffs.
As South Korea is geographically close to China, we believe there are many cases that goods from China go through South Korea. In addition, Southeast Asian countries may also seek to route shipments through South Korea, and we see a growing risk of such cases occurring in those regions as well.
As the US-China trade war escalates, Beijing continues to retaliate with heavy-handed tactics. The United States has imposed tariffs of up to 145% on Chinese imports, citing unfair trade practices and intellectual property violations. In return, China has hit US goods with retaliatory tariffs of 125%. These escalating duties have not only disrupted global supply chains, but also put immense pressure on countries caught in the middle. Meanwhile, South Korea's tariffs remain comparatively low at just 10%, making it a convenient transit point for Chinese goods to be relabeled and rerouted. This loophole has resulted in further strain on global supply chains and heightened scrutiny for trade watchdogs. Now China is intensifying its diplomatic offensive, warning countries not to side with the US or risk resolute and reciprocal countermeasures. These threats come amid reports that Washington is asking allies to curb trade with China in exchange for tariff exemptions, but critics argue that Beijing's bullying rhetoric only underscores its aggressive economic posture as it attempts to isolate the US while pressuring small nations into compliance. Diptanshu Kashyap's report for the Economic Brief, TD India.
India has suspended the over 60-year-old Indus water treaty with Pakistan. How will this impact Pakistan? We're leaving you with this report. Thanks for watching the Economic Brief. Namaskar.
In a swift action, India has suspended the Indus water treaty with Pakistan a day after the Pahalgam terror attack. This is the first time ever India has suspended this pact.
The Indus Waters Treaty of 1960 will be held in abeyance with immediate effect until Pakistan credibly and irrevocably abjures its support for cross-border terrorism.
To understand the move's impact on Pakistan, it's imperative that we look at the course of the Indus river system. The Indus has 5 main tributaries: Ravi, Beas, Satluj, Jhelum and Chenab, while 3 eastern rivers, Beas, Ravi and Satluj, flow entirely through India. Pakistan has access to the Indus and its western tributaries, Chenab and Jhelum. In fact, India has about 30% of the total water carried by the Indus River system, while Pakistan has access to the remaining 70%. Brokered by the World Bank, the Indus Water Treaty was signed by the then Indian Prime Minister Jawaharlal Nehru and then Pakistan President Ayub Khan in Karachi in 1960. The pact allows India to use the water of western rivers for limited irrigation use and unlimited non-consumptive uses such as power generation, while laying down regulations for India related to building projects on the western rivers. The Indus River system is Pakistan's main water source. 80% of its cultivated land rely on water from these rivers. It supports irrigation of crops like wheat, rice, sugarcane and cotton. With Pakistan being a majorly agrarian country, 25% of its total GDP is dependent on the Indus system. They also provide drinking water to major cities like Karachi, Lahore and Multan and supports population of over 237 million. Prominent hydropower plants like Tarbela and Mangla depend on these rivers. A disrupted flow could halt power generation and in turn lead to power cuts. Supply disruptions can also indirectly lead to unemployment, rural-urban migration, which would in turn hurt Pakistan's already ailing economy. The Economic Brief, DD India.